Well, it's Biz News Rational Radio coming to you from our virtual studio. David Shapiro. I love the backdrop. Did you paint it?
No.
Pretty flowers. I mean, it makes us realize that you're not just a pretty face. In fact, there's other pretty stuff in your life as well.
Yeah, I've been an art collector for, I don't know, 40, 50 years. But Alec, the problem is that you find that with the rand at these kind of levels, those pictures that I used to buy 20, 30 years ago are unaffordable today. It's not that the price has gone up, it's just that the rand has gone down, and that's why it's become a lot more unaffordable. But anyway, I've always enjoyed art.
Well, talking about the rand, Dave, we've got a lot on the show today. We're going to be talking with Mark de Kock and Charles Savage in just a moment about the disaster of Phumelela, and you can give us your thoughts on that in just a moment as well. But as far as the rand is concerned, we were bumping around quite comfortably at 14 to the dollar before the COVID-19 crisis hit, and we've now blown out to 18 against the US dollar, 19, maybe 20s in sight, which has caused many South Africans to want to just get their money out no matter what. What are you telling them when they come with these stories?
It's a very difficult conundrum because the rand will only improve once global markets start to improve. And you see that all the time. Every time we get a rush in equity prices offshore, as we saw on Friday, where US markets were a lot stronger, European markets were stronger, and our markets were stronger, the rand improved. It went from the 1880s down to the 1820s. We see this morning a little bit of weakness in global markets, and the opposite starts to happen. The dollar starts to improve as safe haven, as its safe haven status takes over, and you start to see the rand start to weaken as overseas markets. So you've got to decide what you're going to do. If you're going to take your money offshore, make sure you invest it. Don't leave it lingering there. Otherwise, you're going to be caught in the wrong spot. In other words, I'm saying, if your intention is to invest overseas, then take your money out but invest, because that's what's going to happen. It's a balancing act, and it's very difficult to read. But the rand, look, if we get out of this, and I know we're going to get out of it, I don't know when that does happen.
What's the issue, David? Come on. That's not Mr. Glass half full that I'm used to.
No, I'm saying when we get out of it, and I know we're going to get out of it, yeah. I think we're going to see quite a vast improvement in the rand with global markets. So we're in a tough spot at the moment.
So where are you advising that your clients put their money?
No, I'm still global, and it's paid dividends, Alec. The Nasdaq. You had Magda on last week, and we were chatting to Magda, and it was a fascinating conversation. But I mean, she runs a fund called the Fourth Industrial Revolution, and if you would have invested in that fund at the beginning of the year, you're up. I think 20-25%. If you would have invested in the Nasdaq, you're up. Actually, there's a Satrix, Mike Brown's product, a Satrix tracker fund which tracks the Nasdaq. You would be up over 45% since the beginning of the year. Now, a lot of that is the rand, but still, we're living here. We're playing in rands, and that's compared with the local market, which is down maybe 14-15%. So, if you would have gone that route, you're very well rewarded, as you would be with Naspers and Prosus. Two local stocks and that have done far outperformed the market. But I hate to admit it, the ones that have really knocked the market out has been gold shares, both Anglo Gold and Gold Fields. And I ain't no gold bull. I'm not but those have been the winners. So you could have done, with the right selection of shares, you could have done incredibly well in this market.
Well, our business portfolio has also really shot the lights out. I think now we're getting close to 40% return over the last 5 years, and since the crash, we've been going up. But you're right; it depends on stocks that you're in. Interesting, referring to Magda last week, I got a note from Magnus Haystack to say, I won't go into the specifics of it, but he had a chunk of that Oxford fund, Oxford University fund that she spoke about last week, a big chunk, lots of money that he could place with his clients. He says it went in 3 days. So from Magda's point of view, they got as much money as they wanted. And Magnus said that he could have placed a heck of a lot more money into that. It just appears as though South Africans are desperate for something with a little bit of spice that's offshore.
Alec, it's just the quality of shares. We can't get the same quality here, unless you want to play a turnaround, you want to play a bounce in the market from very low levels, which is a very dangerous game, to try and read or trade the market. But if you're looking for businesses that are sustainable, that are going to go up over the next 5 years, and health is an incredibly strong area. In all aspects of it, not only looking for a vaccine. If you look at oncology, if you look at all diseases like that, particularly in cancer, it's increasing just with the population growth. So companies that are focused on oncology, on finding genetic solutions for Parkinson's, for Alzheimer's, for businesses like that. So even in the medical space, there are huge opportunities in the mechanical side of it. What's come out of this crisis as well has been, where you get advice over telephone. So I think they call it telehealth or whatever it is. So a lot of areas, and we haven't even gone into technology, where I still think the incumbents are going to dominate. So that's why, that's what we're looking for.
Well, we are interactive. This is for the BizNews premium community. We can't actually let the whole of the BizNews community come into this, because then the questions that just never get answered. As you know, last week, David, I think only half the questions were answered. But just to let you know that there's a little box down the bottom which says questions. And in that box, you can actually write. In fact, let me ask my colleague, Stuart Lohman, to explain how the technology or the tech works. Stu, you want to just take us through that in case I make some kind of a mistake?
Thanks, Alec. All good. So everyone's obviously can hear us and see us, because I had no complaints. So the tech's working very well, Alec. Just on that questions, is on the panel on the right-hand side, there's a drop-down menu, questions. If you click on that, write your questions, and Alec and myself will see them, and we can go from there. But that's it, Alec. All good. You can carry on your side.
Brilliant. Okay, David, the big topics that we're going to be discussing today. First up, we're going to be talking about Phumelela, which went into business rescue. We'll be talking to 2 members of the Racing Association. Last I knew, the Racing Association effectively owned about 30% of Phumelela. The 2 of them will be giving us more details on how the company got to where it was right now. But it is a company that's got lots of assets, very rich in assets. When it was suspended on Friday, market cap 40 million rand. Now, if you think just the betting shops that it's got, if you want to buy the betting shop license, you'll pay probably 2 million rand a license. It's got 80 betting shop licenses. So just for starters, that's 160 without all of the other assets as well. What is your take on this? Is this just a managerial disaster? Is it the wrong structure? Is it COVID-19?
It has to be COVID-19. There might be structural problems. I don't know. There could be issues like that. But Alec, what concerns me about this whole issue is that last week we saw Comair, we've seen Phumelela, we've seen Edcon, all of these. It's not these businesses' fault. It's not their fault that we're in this situation. This is government's decision to close the economy. And what concerns me is that they actually get to a position like this. I can understand SAA. I'm not going to challenge SAA because that was already under pressure before this, before we stopped flying. But for other businesses, can you imagine how many others we're going to get like this? And that's what I can't work out, is why there's no response from government to say we can't allow this to happen. We can't allow businesses such as such as in Phumelela to go down and that. So I'm keen to hear why. I know you followed it for a long time, and there certainly is a place for them in the market. We know how vibrant that side of the business is, especially the sports betting, which is out of commission. Whose fault is it? It's not their fault.
We're also going to be talking after 12:30 about the lockdown. I see Martin Kingston's already joined us nice and early. Nice to see you there, Martin. And we'll be chatting more about that in some depth, and I'm sure that Martin's got lots of views on it. But just, David, your overview on lockdown. I'm in fact going to have an interview with the only living South African Nobel Science winner, Professor Michael Levitt, who's at Stanford University. Yeah, I'm talking to him tomorrow, Tuesday. Yeah, Tuesday afternoon. So we'll get his views on his former homeland. But he's vociferously strong. He says it's a huge mistake to have a lockdown. I'm sure there are other people in the business world who'd agree. But what's your take?
The same thing. What lockdown was supposed to do was supposed to flatten the curve. In other words, make sure that we could delay it so that the hospitals could get in order and testing could get in order. That's all. I don't think there was any visions that this was going to take months. And I don't think anybody envisioned what the economic fallout has been and what it's going to be. So my view is I'm certainly on his side that, I don't know what the correct balance is, how we get back to it, but I certainly think moves have got to be made quite dramatically in order to unlock this economy and to get us back working again. I think the effects are going to be disastrous if we keep going along this way. So I think globally, those are my views, but I understand some of the complications. Anyway.
We'll be getting more of that in a moment, but let's get on to the first of our two big focus areas today. And welcome to Mike de Kock. Mike, nice to have you on the program. I know that you're talking to us probably from the training center. You guys still able to train your horses?
Morning, thanks, Alec. Yes, look, horses have got daily needs. They're athletes. They've got to be fed, cleaned, and watered every single day. The boxes have got to be cleaned out. Their welfare is of paramount importance to us, not only the human side, but just the horse side of things, to keep them going, as they are our livelihood and lifeblood. When I say our, I'm talking myself as a trainer, jockeys, and especially grooms.
How many people, the numbers that are thrown around are 60,000 people are dependent on horse racing in South Africa for a livelihood. Is there any way that you can support that?
Eric, I think you could probably, the economy of racing, there's probably even more people. If we just start with a horse born on the farm, so he's a foal-at foot with his mother. There's a groom that looks after him. There's a farrier that takes care of his feet. There's a vet that takes care of his and mother's needs and the stallion's needs. There's the farm that the horse grows up on that's got to be managed. There's the food that's got to be grown. Someone's got to drive the tractor. Someone's got to put fuel in the tractor. That horse then goes to a sale. There's a sales company and all that goes with a sales company. That horse then gets sold. You still there, Alec?
Yeah, I'm here. Mm-hmm.
Okay. That horse still then gets sold. Then it goes into training to a trainer like myself, who has a groom take care of it, vets, farriers. It's got to eat. So there's agriculture, the food that's produced, the feed companies, the transport companies getting the horse to the races. The horse then gets to the races. There's a race track that needs to be maintained. There's hospitality at the track. There's betting. So there's bookmakers, there's betting shops, hundreds of them. There's advertising, there's media, there's print media, there's TV media. It goes on and on and on, and the amount of lives that one single horse touches.
Incredible.
So it's probably more than over 100,000 in my opinion, in terms of depends on how far you want to extend it. You even extend it to your Uber driver that drops you at the races,
Yeah. Charles Savage is also on the board of the Racing Association with you, and as you can see, he's on screen there. Charles, we know you at Biz News for Easy Equities. We won't be talking easy today. We'll be talking racing, however. And I want to just ask you if you really are that besotted about this industry that on your Twitter page, as we can see on screen now, you have a horse. I hope, not a donkey, that's having a look at the track in front of it.
Yeah, that's a shot of Reinke's. It's a very nice shot on a very average horse.
Well, and how did you get into this industry? But I suppose more specifically, how did you get into the governance of this industry?
Yeah, look, I grew up with it. So my father raced horses, and Alec, as you know, it sort of gets into your blood, and once it's in your blood, it stays. How did I get into the RA? Is you get voted on by the membership of horse racing. And so just about 18 months ago, Mike and I were both voted onto the RA. And there were specific stakeholders in the industry that wanted more assurance and understanding of what was going on, and specifically wanted Mike and I to give our inputs and views. And that was 18 months ago. So that's how we got involved.
We got quite a lot of questions that have come through, and just to remind you that if you want to have your question answered, please post it in the little box given there. But just for both Charles and Mike, if you can take us through this. There's Phumelela's share price. It was suspended on Friday at 40, well, the equivalent of, I think it was 41 cents, equivalent of 40 million rand in market cap, compared with in the last 10 years. So it's not something that's just happened. In the last 10 years, this share price has underperformed the Johannesburg Stock Exchange by 95%. And if you have a look at the notice that was put out yesterday about business rescue, it now says that the board of directors of Phumelela are no longer in control of the company. The person in control of the company is a Mr. John Evans. Moving on to this, and that's from Business Day this morning, Oppenheimer's helped prevent horse racing industry collapse. Mike, I hope you don't mind, I stole that picture, or not, borrowed the picture of Mary Slack and Jessica, her daughter, who are the people who've put in the 100 million to get, presumably, racing back onto its feet, or at least to continue. Just from your perspective, did this come as a surprise to you that that Mary and Jessica put the money in?
Absolutely not. If one knows Mary and Jessica and that family, for Mary, first and foremost, is she has a love for the game, and a love for horses. They have massive breeding operations where I can tell you now they don't make any money out of. But it's the people. Mary did not want to see unemployment. She loves this industry, and has a great. She's a great South African, a good South African. And her key thing was that the welfare of the animal and the welfare of the workers, and I mean when I say workers from groom up, is her first and foremost concern.
There's a question from Steve Reed for both you and Charles. Please could you ask Mike and Charles whether they believe any individual with strong ties to Marcus Jooste and or Phumelela executive and management team should be involved in the restructuring task team in any capacity?
That's for you, Charles.
How's it, Steve?
Hospital pass.
It's look. I mean, the bottom line is that you share the graph of the share, Alec, and Phumelela's demise hasn't happened overnight. It's been an industry that has been under drip for some time. It's tried to sort of sidestep its racing's demise by adding more revenue streams, but then it's found itself in sort of a perfect storm, and that perfect storm is, a lot of it is self-inflicted. I think some of the management decisions and the control which Jooste had over the industry was a very negative impact, and it suffered severely from that. But you can't, to Steve's question, you can't eliminate everyone because they trusted in Marcus Jooste. I mean, if we did that, pretty much every asset manager in this country would have to resign too. There needs to be a sort of truth and reconciliation in racing. It needs to face its past and be honest about it, and then it needs to forge a new future with trusted individuals. And it certainly has to think about giving people a second chance, because if it doesn't, it's going to eliminate a huge part of a very small industry. It's not a big industry this anymore, and if you got rid of everyone that was attached to Jooste in one shape or form, there'd be very few people left. So as I'm sure people want him to be held account and people to be held account, they will be held to account, but we've got to give people a second chance, is my view.
It was interesting, an interview that I did with Taste to Toy last week, where it was a follow-up on a webinar that he'd done at his company. And the last little bit, like the last 5 or 6 minutes, he really took off at Marcus Jooste and co and said, but if these guys from Steinhoff have not been arrested yet, when are they going to be arrested? And he reminded us it's almost 3 years since the Steinhoff debacle started. So I guess at some point in time, the South African public might lose its quest for revenge, but it's no time soon. And surely with the racing industry, it's even more, because he dominated the industry for so many years as the leading owner, etc. There's a question here, not a question, more a comment from Jao Damata, who says, I disagree 100%. Phumelela and its demise has zero to do with COVID-19. COVID-19 is the symptom, not the cause. Thoughts?
Yeah, I mean, racing was heading in this direction, but COVID was the straw that broke the camel's back. There's no doubt about it. And even if Phumelela was on safe ground pre-COVID, it wouldn't have survived this. I mean, if you just look at the globally at horse racing, I saw Irish racing is considering the same outcome in the equivalent of business rescue. And the UK horse racing industry has been bailed out. So it's very convenient to those who sort of wanted to see horse racing's demise to say that it's got nothing to do with COVID. COVID has impacted incredibly on the industry, and yes, horse racing was in a decline and needed intervention, needs a new way of doing things. But you can't ignore the fact that COVID was definitely the death knell, and even a safe Phumelela, a good, well-run horse racing industry, we'd be in a lot of trouble today.
Michael, from your perspective, you've trained winners all over the world, Dubai, yes. South Africa, obviously, the UK, the US. How important is South Africa in the racing world globally?
I think we rank sort of in the top 6 or 8 in terms of, at one stage we used to be a lot higher in terms of our ratio of expenditure and stakes, but that's obviously got worse and worse as the years have gone by. But our horses have performed and won group races all over the world. Alec, I've raced in probably 10 or 11 jurisdictions in the world with South African horses running very well all over, winning Group 1s in Singapore, Hong Kong, Dubai. So we're up there. It's a very important industry, and it's an industry that has massive potential for growth in terms of exports. We've been held back the last 8 to 10 years due to African horse sickness, as you know, with exports. A more paranoia thing. I mean, it is deadly, but it is also, remember, not a contagious disease. So it would be akin to sort of not allowing anyone from a malaria country not to travel. We've done a lot right, but again, we haven't sold ourselves well, except up until now, into the international market in terms of what we do in biosecurity, etc. So we have a big role to play in the world markets. We have, especially in the East, I believe, our horses are competitive, will be they're very competitive in terms of buying as well. I mean, if you see what in Australia, they're probably at sales average about $350,000 or $400,000 at their main sales, average price of the horses, where ours would be that in rands, 350,000, 400,000 rands. So you can see the value that we are. But the problem we have not played on a level playing field, and we haven't been able to export properly for the last 10 years. We've had to do it via a third country, Mauritius, which is not a great thing in terms of the welfare of the horse.
Well, maybe all of this, they say that you should never waste a good crisis. Perhaps those that make the decisions or make the rules will wake up now to the potential of this industry. There are so many questions. I'm going to ask you guys, we've only got 5 minutes left of this block, just some quick responses. Will share manipulators at Phumelela be brought to book? That's from Charles Pretorius, not surprisingly, something controversial. Charles?
It's a job for the JSE. If anyone's done wrongdoing, the JSE will investigate it.
Mohammed Sheikh asks, what action, if any, will be taken against the previous directors of the Racing Association?
I'm not sure what he's referring to. I mean, it's as director of the RA, we're unaware of any wrongdoings by previous directors. So for us, I'm not really sure what he's referring to.
Do you think this is the
if we do find something?
If you find something, there definitely will be. Sure. Okay. Do you think this is rock bottom for racing, says Ross Hellinger?
There's no doubt. I mean, this is as close as you'll ever get to never coming, back. I mean, and I don't think the racing industry fully understands that. Mike and I, because we're close to it, understand that well. We were pretty much days away from the end of racing in this country. So you can't go lower than this, because lower than this would be shut down. And in that, I think this is a crisis that we can use to restructure and reform and build a trusted industry. And it's a great opportunity for horse racing to redefine its future. And that's not going to be easy, but it is much easier now than it would have been 5 years ago.
Michael, Mary Slack's 100 million, it has to come with some strings attached.
I think Charles is better placed. Look, with Mary, there's no strings attached. I can tell you now, first and foremost, it's going to be survival. But I mean, Charles will be better placed to tell you how it will be utilized and what expectation there is.
Yeah, I mean, Alec, the 100 million rand is really to make sure that the business rescue practitioner has got the capital to ensure that horse racing can survive for another 6 months. And that's typically sufficient time for a business rescue practitioner to do a deal in business rescue to see the business survive again. So, there were some conditions. None of them are draconian, and they're normal for a standard business rescue practice. There's nothing extraordinary about them. And as Mike said, Mary's commitment really was to save jobs. And so when you want to save jobs, your conditions are less draconian than what they might have been if it was another capital provider.
Final question comes from Joe D'Amato, who says, I never wanted to see horse racing's demise, but the UK and Ireland are also victims of bookmakers plundering the sport. So I suppose there's lots of intricate issues that are going to need to be addressed and focused. But Charles, I'd like to ask you a question. Some months, perhaps years ago, you were crossing swords with the Jooste group. I think it was at the time of the Western Cape racing being hived off. Did you get any insights then that you're going to be able to apply now that we are in a crisis, or this industry is in a crisis, and it can now be resuscitated?
Yeah, I mean, the thing that we tried to stop back then was we wanted Gold Circle to stay together, and that was the KZN region and the Western Cape, because we realized that they couldn't stand apart. And the bottom line is that that's borne out now. Racing as an industry has to come together under a single banner. Right now, there are 3 organizations in Phumelela, Kenilworth Racing and Gold Circle, and they have to come together. And importantly, in order for them to come together, there has to be a trusted council of people that are going to lead that coming together. And horse racing is the most divided, untrusted industry I've ever been involved in. I mean, I've never seen an industry so divided and so untrusting of each other. And central to our turnaround is going to be to find a team that we can trust in, that brings all of those organizations together and races under a single banner. Failing that, we'll just fail to race a few years from now.
Robin Lowe says, not a question, just a thank you to Mike, Charles, the Racing Association board, and the task team for everything that you are doing. And Jason Dedekant asks, he says, this is not a scenario that is going to be completely sorted out in a short space of time. But from the task team's perspective, what is the #1 identified action that you'll be focusing on? Perhaps it's a good way to close off, Mike.
We've got to get back racing. It's very, very important. That's where it all starts, Alec. And to get onto the race, get onto the track as soon as possible, and then we can get the economy of racing going again. Without racing, the horses racing, then nothing's going to happen. That's where it starts, and from there, everything. The greater economy of racing is expanded.
Charles, you aren't asking. Phumelela wasn't asking for a heck of a lot. Only 65 people on the racecourse to conduct a whole meeting. Why is government so reluctant to allow this?
Yeah, I mean, geez, Alec, they won't let e-commerce, and and racing is a far cry from e-commerce, and racing hasn't done itself any favors. It's a misunderstood sport, and we have not communicated, engaged government well in our past, and so they probably, many of them probably don't even know we exist, sadly. So we just haven't we haven't helped ourselves at all. But as Mike said, if we don't get back to racing, then this industry is going to just get smaller and smaller. And literally, for every month that we don't race, I reckon we're going to get 10 to 15% smaller every month. And it's already a small industry, so we've got to get back to racing. And to that question, the thing we've got to do is, once we get back to racing, the income streams will start, the economics of racing recover, and then we can do a deal in business rescue with the business rescue practitioner to pull the parts of the business out of business rescue. But until there's any racing, there's no revenue, and racing's demise will just get worse.
Charles Savage, Mark de Kock, thanks for your contribution to Rational Radio this week. Dave Shapiro.
Thanks.
100,000 people, Michael says, are or jobs at risk here. You want to work that out a little bit more. You're probably talking dependents. We know in South Africa, for every person who's got a job, there are quite a few dependents as well. It just seems like it's really all 65 people, and perhaps the government should start trusting business to not make everybody sick just because they come to work.
Well, that's the problem. I don't think, and it's not unique to South Africa, I think globally, I don't think anybody had a grip or understanding of the supply chains or the multiplier effect, or how businesses are so intricately connected. I don't think that was thought out. We're locking down business, etc. And as I said earlier on, the intention was for a very short time, not for as long as we've seen it now. And the big fear and the big discussion point at the moment is that the longer this goes on, the more permanent those job losses will be. That's the big fear. So it's a difficult situation. I know where my sentiments are. I just think the sooner we get back to work, the better. Of course, with conditions, with safety conditions or health conditions attached.
Well, as you can see on your screen there, it's welcome to Martin Kingston, who I'm glad you were with us earlier, Martin, because you could hear what one industry is going through, and it doesn't appear as though it's a heck of a lot that's required to get this industry going again. Just give them the permission to carry on racing with 65 people on each race course. Yet 100,000 jobs do look to be at play here, at risk. Were it not for Mary Slack and her daughter coming in with 100 million rand to keep it going for a while, that might have been the end of the road for horse racing in South Africa. From where you sit, it is a very responsible position, and I've heard on the webcasts that Business for South Africa have done, you're pretty forthright on what lockdown is doing to this country. What do you say to people in an industry like horse racing, and we'll obviously move on to others as well?
Well, Alec, good afternoon to you and your listeners. We've had that conversation with lots of sectors, lots of individual companies, both nationally and within regions, and it's not unique to horse racing. David was right. Perhaps we need to go back a stage. The first thing was we needed to prepare the country for the scourge of COVID-19. The reality is, although people are infected and people are dying, it hasn't really begun. The storm has yet to really land on our shores. We know that we're going to see a surge or a spike probably in August or September. That's many months away. And we needed to make sure that our first line of defense, our health defenses, were in place. And that's not just the individuals and the PPE, but it's the hospitals, whether they're existing hospitals or field hospitals as well. And we've taken the 5 weeks that we've had to be able to put those systems in place. But at the same time, we have been effectively training very radically economic activity. And our view as Business for South Africa is that within certain protocols, and I'll elaborate upon them, we need to return the economy to full productivity as quickly as possible, because we can ill afford to have a conversation about lives versus lives, people who have existing conditions who can't get access to health support, or lives versus livelihoods as more and more people become either unemployed or are unable to support themselves and their broader families. So we think that with the necessary and requisite health and safety protocols, we should be returning people to work. But we need to stop and pause for a moment. The reality is that effectively dealing with the contagion requires, first and foremost, to have an effective containment strategy, that's lockdown, but it has to be accompanied with appropriate procedures in terms of screening, testing, tracking and tracing, because only with those procedures are we able to establish with some level of empirical data the spread of the infection and the velocity of the spread. Now, we don't have that information at the moment. I think there's been much written over the last few days about it, and we need to radically accelerate that. Because we don't have that information, it means that actually the lockdown without that information can't be appropriately applied, and we can't move through the levels from level 5 to level 4, the level we're at now, and through to levels 3 and 2 and beyond. And as you know, we are advocating a very accelerated transition to level 2 and beyond, because that's the only way we can return the economy, as damaged as it was, to full productivity as quickly as it can, and we can limit the impact on society at large. And the last point that I would make in that,
sure.
the last point in that regard, if I may, Alec, is that it's very easy for us to talk about health and safety protocols, but actually it depends upon the sector concerned. The mining industry, for example, has extremely advanced protocols. They already had it in place for the high levels of HIV that they had within in situ, for the fact that they had to care for communities that were within their own purview. Many of them have their own hospitals. So the mining sector is well prepared for that. There are many other sectors that are not prepared at all to be able to put in place very significant health and safety protocols. And the second aspect of that is that to get to and from work. We need to make sure that transportation, particularly public transportation, which is a major vortex for contagion, can be controlled. We haven't yet, as a society, got our mind around that. And the last point I want to make is this is a societal problem. When we see on the TV the number of people that are out and about, even if all they are doing is collecting their social grants, and they are not social distancing, they are not wearing masks, they're observing none of the protocols, we know that we've got a problem that is theoretically out of control unless we can encourage responsible behavior on behalf of all citizens.
Yeah, well, you don't just have to watch on TV, just to look on the YouTube channels and the WhatsApp channels. And the I had a video sent to me last week from a leading businessman in East London of Lusikisiki, and it is as though it were month end all come at once, the absolute crush of people there. And he said it's exactly the same in most of the Eastern Cape towns, where people are not really paying attention to it. But let's just have a look at these two pieces that I've got on the screen right now, both from articles in the Business Times, Sunday Times Business Times yesterday. The one is from the Chief Executive of Business Leadership South Africa, Busisiwe Mavuso, who was very outspoken in what she said about the country having to go back to level 2 at a rate of knots. And then Hilary Joffe's piece, which was a similar call. Martin, at Business for South Africa, last I heard, your calculations there was that the economy could contract by enough this year that would take us at the current rate of economic growth, something like 10 years to recover. Now, let's hope there's going to be a different approach to the economy and restructuring, etc. But that's an enormous price to be paying for lockdown. What can you do to perhaps help to get things moving in the right direction?
Yeah, so Alec, there's no doubt that we are going to be facing a very severe contraction in the course of 2020 and probably leading into 2021. I don't believe that there is a consensus view. We share National Treasury's concerns about the fact that the longer the lockdown, the more protracted and the deeper the contraction. Effectively, we're in a depression. We're not in a recession. We were already in a recession. We would know that climbing out of a depression is going to take us at least 3 to 5 years. We hope that that's the outer limit, not the inner limit of the time frame. By the way, we can't afford 3 to 5 years, let alone 10 years, as I think we would all accept. with associated ramifications, in particular for unemployment, for poverty, and for inequality. All of those metrics go in the wrong direction. It's a horrendous scenario for South Africa. And therefore, we have to, in any event, post-COVID-19, reimagine what our economy should look like on an inclusive, integrated basis, where it's sustainable and we have a radical lift out of the depths to which we will undoubtedly descend. The lockdown aggravates that situation. On the one hand, it minimizes the risk from a healthcare perspective, assuming everybody is observing the protocols you and I were just talking about, which they are not. But it causes sustainable and potentially long-lasting damage to the economy as currently configured. We may want a differently shaped and constructed economy coming out of COVID-19. The truth is that if we're only going to see the surge or the spike in August or September, and that's on the premise that there's only one surge, we now know that it may be that there are surges, that actually it may be only by next year that we're in a beyond COVID stage. Vaccines and we have treatments that can be rolled out on an effective basis, coupled with herd immunity. That's not going to be. We have to reconcile ourselves to the reality that we're looking at a long-term problem. In other words, not several months, but potentially this year and beyond. And therefore, we need to accelerate out of it both during the contagion pandemic phase and beyond that. Now, my own view, and I think it's Business for South Africa's view, is that the government is completely aligned with us on this. There is no difference of opinion as to the need to return the economy to full productivity as quickly as possible, and therefore to transition through the levels as quickly as possible, but doing it in a responsible manner. In other words, we cannot open up the economy and exacerbate the risk. I think that's government's biggest single concern. The other concerns, I believe, we can address, but that concern needs to be dealt with head on, and it's not just a business issue. It's a societal issue, as I said. Lusiki Siki has nothing to do with business. It has everything to do with society at large. The challenges that we've got in terms of our public transportation system, townships and informal settlements, those are national issues that we need to address. If business can come to that party and play a role, then we need to do so. And indeed, we're in that discussion both as business and with government. But as I said, it's a broader societal issue.
Okay, I get that. There are, however, people like the only South African scientist to have won a Nobel Prize, who says that the information we've been given is exaggerated. And he's gone, Professor Michael Levitt has gone very publicly on record to say that, and that the decisions that were being taken, not just here, but all over the world, were based on incorrect information. And increasingly, that information is now being shown that it is not as ruthless a killer as initially anticipated. We get stuff coming out of Italy now to say that the numbers there have been heavily exaggerated by comorbidity, etc., etc. What happens if in 5 years' time or even 3 years' time, the young people turn around and they say, hang on a minute, you guys completely screwed this up. We don't like this system of government and we might do things very differently. Those are the questions that normal citizens have and are saying, hang on, guys, are you actually looking at all the data on a real-time basis, or are decisions being made on data which now is quite clearly to have shown to be exaggerated?
So, Alec, you put your finger on the biggest issue. None of us, not even Nobel Prize winners, by the way, are experts on COVID-19. That's become absolutely apparent. We've got governments around the world, not just in South Africa, whether it's the US or the UK or Europe or Asia, who are all trying to work out what an appropriate intervention strategy is. If anybody on this show watched Boris Johnson yesterday, I would say we're a long way ahead of the UK in terms of trying to get our minds around how best to unlock the economy. There's no solution, and clearly overreaction is a major risk that we all need to consider. That's a political decision. At the end of the day, the politicians who've been elected by the populace at large, have to take these decisions. All we can do is provide appropriate input into that decision-making process, which is what we are trying to do. And then we need to abide by those decisions. I, for one, am extremely concerned that there may be an overreaction, that we may be cutting off our nose to spite our face. As I said, we're going to get into a lives for lives, that's the comorbidity argument, or a lives for livelihoods. We cannot afford to have that discussion. What we need to ensure is that we ratchet up all our defenses at the same time, and we don't turn off the economic tap at the expense of everything else. We do think it was necessary to ensure that we had lines of defense in place. We now have those lines of defense in place. Are we where we need to be as a country in terms, as I said, of screening and testing and tracking and tracing? Absolutely not. Are we appropriately containing movement? Certainly not. And we need to revisit those, I think, on a dynamic basis. I think there is no point in assuming that because we thought that an approach was correct 3 months ago or 2 months ago, that should be hardwired, which I think is the point you're making. We need to revisit that on an ongoing basis, and we need to adjust it to circumstances. And indeed, as you say, as more information becomes available, we need to be flexible and dynamic in our response to that. My own assessment is that government is, in fact, listening to all of these inputs, as are the rest of us who are involved in these discussions as society at large. I don't believe that there's any one person who's got the answer right now. I don't, unfortunately. But the responsibility is a heavy responsibility. When we look at National Treasury projections, which under a worst case scenario see 7 million more people being added to the list of the unemployed, moving narrow unemployment to 50%, not youth unemployment, narrow unemployment to 50%, which means we're probably talking about youth unemployment in excess of 70%. Those are statistics as a country we obviously cannot live with. We've got to engage with the subject matter right now and take decisions accordingly based upon the best information available to us at the time.
So where is the president? Why aren't we seeing him on television every night or even every week?
Well, I think we do see the president on television every day. It's just that he doesn't address the nation every day. So the strategy that has been adopted in South Africa is not where, you know, Boris Johnson, and by the way, Boris Johnson doesn't do it on a daily basis. Donald Trump addresses the nation on a daily basis. If you look in the UK, there are a variety of ministers, including the Minister for Health, who addresses the nation on a daily basis. That's exactly what is happening here. I'm actually that the president of South Africa needs to address the nation on a daily basis. He needs to be very visible. He is very visible. He is absolutely in the front line, engaged in this with all stakeholders on a daily basis. I don't think that we can expect him to do more. What is critical is that we have a higher level of visibility as to the direction of travel. And it's frustrating for all of us. It's frustrating for all of us because none of us know whether there's light at the end of the tunnel. You know, I think it's fair to say that David said there is light at the end of the tunnel. We know there is. We just don't know when it's going to be there. We don't know how steep the gradient is to get to the end of the tunnel. We don't know how long it's going to take us. And we don't know how many people, frankly, are going to become sick and die, and how damaged the economy is going to be over that period of time. So that uncertainty is, I think, bothering and frustrating all of us. But I don't believe the government is in a better position to be able to prophesy that than you are, frankly, Alec, on this show. None of us have that solution to what we do know is that it's going to be with us for the foreseeable future, both the contagion or the pandemic itself, the infection itself, and the after effects for the foreseeable future. That is for sure.
I certainly wouldn't be one trying to do any kind of prophecies on this thing. The more I talk to people, the more I see exactly what you're saying, is that we really don't know what we don't even know yet. But just a final question before David puts his all back in. What did you make of the actuaries from Panda who maintain that 29 times more people will die as a result of the economic contraction than from COVID itself?
Yeah, so we saw the Panda work. We are actually using SASA work, which is the South African Actuarial Society work, which models many of the same outcomes. It doesn't have the same outputs, by the way. I think we must be very careful that we don't rely upon a single study and draw conclusions accordingly. The point they're making is the livelihoods point, and we agree that there is a trade-off, effectively, between making sure that our focus is exclusively on COVID-19 and those who have existing conditions just as there is to be struck in the balance a view that has to be formed on unemployment and abject poverty and access to basic provisions. I think that was the only point they were making, but I would not place reliance upon the figures. I don't believe we're in a numbers game right now. I think this is a highly nuanced conversation that we're having, not only as a country, but as a world. But certainly we need to take account of those inputs in our evaluations.
Mr. Shapiro, do you have a final question for Mr. Kingston?
I'm not a question, but rather a thought. And I suppose I'll put it in the way of a question. I think the one thing that bothers me, and I'm reading a Churchill book at the moment called The Vile and the Splendid, or The Splendid and the Vile, which is a look at his life and conduct put together by diarists during the Blitz. And I think what comes across is how important leadership is. You know, how absolutely important he was to the spirit of the British people during that time. And I'm not comparing the times. What I'm merely looking at is leadership. And I asked Martin on a global level, what has disturbed me throughout this entire period is that there isn't one leader that has stood out. Perhaps what's her name, Jacinda down in New Zealand, and maybe even Australia, maybe even Angela Merkel. But I mean, Trump is completely absent, and America is completely absent from a global point of view. We always relied on some nation to take global control of an issue like this, and it's imperative that we have some kind of global view on how to address not only the pandemic itself, but also the economic lockdown. How are we going to get through this? It just seems to be, from my point of view, a total mess. And I'm just asking Martin how he feels from that side. And we're alone. You know, we're alone, South Africa. We're trying to do it alone. A small little country at the bottom here with people, as Martin has described, you know, who don't adhere to social conventions and you know, behaving the way we should in a situation like this. But I'm just interested in his perspectives on the global side of it.
Yeah, so my sense is that, David, you're absolutely right. What we have seen over the last few weeks has been parochial, myopic sentiment that has crept in globally. Every single country has locked its borders and focused domestically. So you actually don't get a global picture, and you don't feel that the global leaders who have the resources and the capabilities can assist those who are less well equipped. So the biggest risk, I think, at the moment is a fragmentation of global solidarity, and where it's going to take root most specifically, of course, is in Africa, because many other countries have got the financial and the human resources and systems to weather the storm. Africa, frankly, does not. South Africa is better placed than most other countries on the continent. And if we don't address the economic, the healthcare, and the societal considerations, which ultimately become political considerations in the rest of the continent, they will visit themselves on South Africa's shores as well as in the rest of the world. We've seen almost no evidence at all. If you think that President Ramaphosa, in his part-time job, if I can put it that way, as AU chair, you know, has to deal with this, and he has raised a fraction of the money for the AU that we were able to raise for the Solidarity Fund in the time available, it puts these things into perspective. When we have global pledging conferences, and the amount that is pledged is much better than nothing, but frankly, is a drop in the ocean relative to the amount of fiscal stimulus that is being discussed in Europe, or the UK, or Japan, or China, or the US, I believe that should give us some cause for reflection. Because when the pandemic has gone, you know, it's going to leave a very long shadow in the rest of the world, and specifically and particularly in Africa. I think it's just not on the agenda. It needs to be. Just damage that is being caused societally. You know, we talk about two lenses. We talk about the economic lens and we talk about the healthcare lens. There's a societal lens that we need to think about very, very quickly, because the fabric of society is fraying. And that is exactly where leadership, again, David, I would say, has a role to play. And not just leadership, which is of a political nature, not just leadership from business, but from civil society. We need to see leaders emerge who are speaking of a common hymn sheet about not only how we're going to deal with the immediate challenge of COVID-19, but how we're going to reconstruct the country thereafter as a consequence.
Martin, final question for you. David, don't go anywhere. You have got dozens of questions, literally, that they're going to keep you busy with on investment matters. But Martin, a final question. When you're talking, and there's a big business audience listening to this, people who have their own businesses. A friend of mine yesterday said he hadn't built anything in the last 2 months. As a consequence, he and all his staff have literally not had any income for the last 2 months. What message can Business for South Africa and yourself as the lead of the business part of Business for South Africa give to entrepreneurs or small business people?
Well, we are certainly of the view as Business for South Africa that the most exposed are indeed the entrepreneurs and the small business people, which is why we put out a call 2 weeks ago for all SMMEs to be paid in full and on time, because they don't have the luxury of liquidity buffers that larger companies may have. I'd like to hope, and by the way, that doesn't just apply to the private sector, it applies to the public sector. They also need to pay their suppliers on time. We're going to have to gird our loins for the next few months, we know that. We're going to have to see to what extent we can supplement the support that has been announced by the President, the 500 billion rand that was announced, because frankly, although it is absolutely critical, it's not adequate for our requirements over the next several months. And we need to see how business as a whole can rally together, because there is no doubt that this is not going to be a short-term problem that we're going to have. It's going to live with us for several months and certainly into 2021 and maybe 2022. And therefore, we're putting in place systems. I'd like to think some of the systems that are putting in place are working. They took some time to get up and running, the TERS scheme, for example, but it is now beginning to work. We're beginning to unblock it, where we can alleviate some of the immediate pressures on your friend and his staff, which I think is a universal problem within South Africa.
Martin Kingston, thank you very much for coming on and sharing your insights with us today. We really appreciate that, David. Okay, well, what do you make of that? You've had two pretty heavy issues to deal with today. The first one with Phumelela, where Mike de Kock says 100,000 people, he reckons. Phumelela said 60,000 direct jobs. That's a chunk of the economy, and it just seems a little bit like the cigarette story, where really, if you're selling cigarettes, is it really going to make that much of a problem? If you, like we learned in Prohibition with Al Capone, etc., in the 30s in the United States, if you ban something, the criminals will just move in and clearly seem to be doing that there. So that's a Phumelela story. And then moving on to the other story, which is the lockdown issue. I know Martin, I suppose, is in a bit of a tricky situation, given that he engages with government and he surely can't be too confrontational with them, but that is a challenge to get that turned around.
He does set out a program, and I think the program is just behaving responsibly. I know Boris Johnson they've changed their logo now to stay alert, not to stay isolated, or I don't know what it was before, but now stay alert. And I wonder how we do that in a country like South Africa, where you've got people who are living in areas where they're in such close proximity. They haven't got the room that we have. They haven't got the houses. They haven't got the social areas that we do have to live our lives. And, we're quite comfortable here. And I feel very, very sorry for them. But I still think we have to introduce the protocols. But he said something very important. The mines have always done it, and we as a country did it for HIV. We went out and we tested. We went to businesses and we tested. And we continue to test in an effort to try and get on top of it. And you have to congratulate the country for being well ahead in that instance. So we've done it before. All we have to do is use the same kind of approach, to overcome this. Yes, which is meaning washing your hands, putting masks on, and behaving yourself properly in that. So hopefully there was something we can get out of it. But I think what's absolutely imperative is to actually get people back in the offices and try and get the economy going, and the effects, the multiplier effects of that economy.
Okay, let's get to your questions from your vast fan club, and it is vast, David. Starting off with the first one here comes from Peter Salter, who wants to know about Sasol. Is Sasol a buy at these levels, Mr. Shapiro?
You know, it's such a difficult question. I mean, we've recovered so much there. They still have issues. You know, they have balance sheet issues. They have the volatility of the oil price, which is up 5% one day, down 10% the next day. We don't know where oil is going. And they've got to manage themselves through it. Do you buy it at these levels? You know, from my own personal point of view, from a trading, you know, if the markets keep going up, which they seem to want to be doing, you're going to get Sasol going up as well. But I think you mustn't ignore the issues that are surrounding it. You know, do your homework on it. Just don't be blind and buy it. Know what you're buying and know what's there, or, you know, what faces there. So I'm in no man's land at the moment. I missed it up, I must say. You know, I missed that massive 300% gain. But look, it comes back to the Phumelela situation as well. You know, it was an interesting conversation to listen to Charles and to listen to Mike, particularly Charles, going to the background of it, saying, look, this was an industry in decline that needed to be re-looked at. And all that's happened is the pandemic has just taken it over the edge. And I think maybe Sasol as well as a business that had to re-look at itself. It went into Lake Charles blind. You know, obviously things weren't, there wasn't much control over it. It went out of control for them, and they found themselves under huge pressure, heavily indebted, not realizing that you're going to have the pressure on the oil price. You know, I don't think that formed part of their discussions when they looked at the projects. But so you've got to look back and say, okay, where do we go to from now? Can we swing ourselves out of this at the moment? I think it's going to be a long process upwards. So that's why I'm staying out of it. But from a trading point of view, who knows?
Just looking at on the screen now, David, you can see the volume at the bottom. And there were some big volumes on the 30th of April at 80 cents. It's now 40 cents. You know, nearly 1 3/4 million shares. Good, eh?
That's not good in the sense of whether someone was getting out. You know, who was getting out of that? I'm not looking at who got in. I'm saying who got out.
Look at that. There's suddenly, as the demise began, you could see that volume traded on that side. And I guess if you were to look at Sasol as well from a similar situation, it also gives you those kind of a picture, that kind of picture of a very high volume period, trading period there. And I'm going to just take you to that graph on the Wall Street Journal as we talk. And you can see there, Dave, from what date was this? Around about 6th of March.
So the
previous volumes over going back years.
You see what's happened is that's why Charles is smiling all the time, because people can't go to the horse races, they can't back on sport, so they now started to back on the stock exchange, and those are them coming back in big volumes. And that I think a huge number of people taking a punt. And Alec, they were right. Do you know that if they got it at those low levels, these retail punters who came in actually got it right? And they're going to be able to brag about this for a long time. You know, the question is, where do we go to from here? Can we continue that upward trend or that? And that's the debate. You know, that's a difficult question. But at those very low levels, they managed to, you know, call the bottom. So you can see that's all punting. You should ask Charles. I mean, he must have been making a fortune there.
Easy equity. There's a question from Rick Lowe who says, how do the panel how does David view companies in the 5G environment?
Oh, absolutely. It's a big area, and there's so much attached to around it. 5G is going to be a game changer, and we're already in that. You know, we're already in that area. So the cloud, 5G, security around 5G, programming around 5G, all of those companies are going to benefit. Personally, I've gone for Salesforce, which is a programmer. You know, as we are doing now, you're storing your information on 5G in the cloud. Sorry, you're storing it in the cloud. And it's the companies who are going to be able to access that information, analyze it, artificial intelligence, that are all going to be the beneficiaries of, of 5G. 5G is nothing more than the fast transmission of data, which makes what we're doing now a lot easier. So I think anything around that kind of, any tech around that area, I think is well worth looking at.
Salesforce, $125 a share. Mid-March, $175 a share today. Sure, David, and the technical analyst would tell you it's broken up above the simple moving average. That's a good one.
What's interesting as well, Alec, is what's very interesting is that we've been looking at ESG. It's a subject now which is going to grow in importance. In other words, behaving yourself. And it's not that you can find companies, specific companies, that are in that kind of area. What happens is every company is going to be assessed on ESG. And we've been looking at that quite carefully, and Salesforce is one that fits the bill, that does come through, ticking the right boxes. So I think every time we look at a company, you don't want those listeners, challenging us on climate change and governance issues. As you had to, as poor old Charles had to handle on with Marcus Jooste. You don't want those questions anymore when you select a share. But Salesforce fits those bills, as does Accenture, as does other companies called, Splunk. I think there's another company called Splunk, also in that kind of area.
Mark Benioff, I thought that was the man. 49,000 employees, as you can see there, and a very sizable business already. Salesforce, $158 billion in market cap. Mike DeToy wants to know from you, David, taking money offshore now, but hedging against the rand strengthening. How do you do that as a private investor?
I said that in the early part of the program. I say, if you are going to take off money, make sure you invest it, because it's a difficult time. It's so difficult to read the rand at the moment. I believe that as we get global markets, or as we come out, or when we come out and global markets pick up, the rand's going to improve quite dramatically. But you want to make sure that you're not exposed, because you could lose money on the rand, but you could make it up by going into the market. So that's the conundrum. If you are going to go offshore, invest it. Otherwise, you can wait here and to see what happens. It's difficult.
You're having a bet. If you're buying the rand, surely you're having a bet at the way that the government is managing this COVID-19 crisis. And if you don't think they're managing it well, then that 18.25 might be a bargain when you look into the future.
What's been interesting, and you can never get into the mind of investors. It's always the challenge, but our bonds are doing incredibly well. Why? Because when you've got a world where there are negative interest rates or zero interest rates, if you look at our 10-year bonds at 10, 11%, it becomes attractive, regardless of what you think the economy is going to be. And I think Martin painted a very bleak picture of where we could be going. And yet the market tends to ignore that. So as more money comes into our bond market, the stronger the rand will be, the more inflows will come. And that will happen as things improve. So the worst is being probably discounted in our market. Look at Process, yeah.
Well, that's Benjamin Pretorius's question. Why is Process so popular lately? Wow, it is. It's really done well, hasn't it?
Well, it's tech orientated, and have a look at what's happening in China. They're increasing their stimulus efforts. They announced another package now. I haven't gone into the details, came out this morning. But Tencent, I think, it's perfectly placed for where we are, for people who might be isolated in their homes. It just offers every element from gaming to communication to payments to everything. I think so. Don't ignore Alibaba. Do not ignore Tencent. So that's the underpin. but you have got a Bob van Dijk who's looking for other opportunities, all of which are going to benefit. If he can get I know he's got classifieds going there, but if he can get food delivery, that's that's going to be another big winner in an e-commerce world, and I think people are getting pretty used to ordering it from home. So I still think this has been a great investment, and it continues to be the substructure or the foundation of any local portfolio.
But isn't that interesting when you look at this chart as well? The blue one is Tencent, and that's telling you, Benjamin, why Prosus has been so popular. This is a rand story. So you take Tencent's price, and then you take it in the rand depreciation, and you've really literally got the reason for Prosus. So thanks for that, David. There's a question here from Johan Oordendaal, who says, so a company that has one leg in health and the other in IT should be well positioned.
I don't know which one. You know what? Amazon.
Of course. Amazon did that big deal with Berkshire. Yeah.
Berkshire. They're doing it with JP Morgan, and they're getting their health, their healthcare product together, and they could be big. Have a look at that, and do not underestimate Amazon's power in going into the health industry as well. Fascinating story.
Clever. I mean, what an absolute. Well, Warren Buffett says it. He says that Amazon has surpassed all of his expectations, and he doesn't know how you beat it. And it's a little bit like he had that view on Google, if you remember, a few years ago. So there we go, Johan. You've got Amazon, which, by the way, is the biggest share in our global portfolio because it really just has done so incredibly well over the last 5 years. And you can see there, we bought in around 300, it was around 327, I think, was the share price then in our portfolio, and it's now sitting at 2,379. Put on $2,000. Very nice.
You know what's
Sorry.
You know what's interesting about Amazon and about American companies is that they write off their investments in the quarter. They write it off through the income statement. So we saw it in this quarter with Amazon. So don't be fooled by that. Other businesses kind of capitalize their expenditure and put it into products and put it into intellectual property or into their into goodwill. Not American companies. So that's been the beauty about Bezos. As he spends it, he writes it off. So what you see is what you get. And it's very important. Do not be fooled by quarterly, or do not be put off by some of these quarterly statements.
Very important. Yeah. So one does need to, if you're invested there, go and watch the quarterly results. Or sometimes they don't actually videocast them, but you can at least listen to them. Paul Jeffrey says, so David won't be swapping his art for horses anytime soon. Well, he wants to know, though, is Telkom attractive at 19 Rand a share?
I don't know. It's they've tried very hard, but it should be an industry that's doing incredibly well, mainly because of its data transmission or sales of data. But they're doing that at very, very small margins. And I'm not sure.
Look at that chart. Wow. It's a one-year chart.
Yeah, and I think a lot had to do with management are really trying hard, but I think they've got so many legacy issues that they're carrying, particularly on the voice side of it. We've got a new product here, which is a Telkom phone, which is great. Which is my old landline made into a cell phone. You can walk around the whole house and you've got all the benefits of a cell phone. So they really are trying, but it's an industry which you're competing in very low margin products, and yet the investment that you have to make, your capital investment, is still very high. And we were talking about 5G. When these businesses go into 5G, there you are, they have to lay out huge amounts of money. And what do? We don't want to pay for the product. We want to go sit in Starbucks and get it for free. So they've got to change their model, which I know AT&T and Verizon and all other businesses are trying to do by introducing streaming type products. But I haven't got very strong views on this.
Well, had you bought Vodacom rather than Telkom 3 years ago, you would have outperformed it massively, more than double. And in fact, that's the blue line. It's the Vodacom is the blue line. If you have a look in the last year, it's been a massive outperformer as well. So I don't know, David, 19 Rand a share, perhaps some people would see it as attractive. I guess what you're telling us.
I go through Vodacom's numbers. They came out this morning.
Yes.
There are a few, I've got to go through them in greater detail. I know that the results are a little misleading because in the last period, they brought in the BE deal, so it tended to understate profits. So therefore, these profits are a little, the increase is a little overstated. But I need to go through them in greater detail. But they seem to be on the face of it fairly decent, so they're coming through okay.
Well, remember, they've also had that massive surge in volumes through lockdown. So they're probably well positioned for the future, and they're spending more money on it. And you're seeing the way that the bandwidth, we're all getting used to faster bandwidth now, and they're actually feeding us a little bit like addicts in a way. We're just being fed with faster bandwidth, and we won't want it to be taken away. Dave, 2 last questions. Has South Africa fallen off the fiscal cliff? Says Ivor Fletcher, and if so, how do we get out of it?
With great difficulty. I think it's going to be a hard path upwards. I think Martin was great. It was wonderful to listen to him, and he laid out in very articulate terms, where we are and what needs to be done, and the path outwards. I think what troubles me more than anything else is not the mining side. It's not getting back to business. It's a tourist side. It's so important for us, and I keep thinking, what becomes of a Cape Town? What becomes of a KZN in December if we don't get the tourists? How does a city like that cope, which relies so heavily on tourism? And that includes our game parks and businesses like that. And the people very well, Alec. And that concerns me dramatically. It's always been one of the important points that we focused on when it's come to development plans in our future. And I would love, I just hope that we get people coming back. Anecdotally, as things are happening, you saw Disney in Shanghai, people were there in droves, putting on masks, washing their hands, but they got the numbers back. And also in Europe, things are Airbnbs starting to pick up, and that. So hopefully we get back to travel and tourism, even if it's slow.
Yeah, massive challenges, and a business-first approach is the only thing I think that's going to get us out of all of this. And I'm not sure that we've got that mindset instilled yet in those who are making big decisions. And just to close off with, Anthony Rotenbach wants to know, is a wrapper fund the best way to invest offshore?
I'm a simple accountant. I don't like complications. I pay the tax. That's. I know there are a lot of benefits in that, but I find simplicity is. I've always been simple, and I've taken a simple approach. But that's me personally. I like to be flexible. I don't like to be having to account to anybody else and phone them up and have to do trust accounts and all things like that. So my own approach is pay the bloody tax, and just live simply. So, but again, you're going to speak to 10 people, you're going to get 20 opinions.
Buy Amazon and don't worry about anything. Just buy the best quality companies you can get, and let the market, let their brilliance take care of the growth thereafter. A little bit like when. I remember when I started MoneyWeb in 1997, I had this conversation with someone the other day that the internet at that stage was a land grab, Dave. You might remember it, the dot-com boom. Everything was going only one way, and you had to spend yourself to riches. So the bigger your losses, the better the market liked your story. And at the end of that, because this was the only little business I just couldn't understand it and didn't buy into it. I remember our little company was of 12 listings on the stock market in the internet field, in this local stock market, was the only one that was around a year later. And it is, you just let the growth take care of itself. And that was the view we had. Just let's survive and let the growth take care of itself. And I got a feeling that South African equities are a bit like that at the moment. if you can invest in something that can survive, that can see through COVID-19, the growth will take care of itself because the market will be shaken out. And you have a look at on the screen there, just the final graph that I wanted you to give us some thoughts on, Dave. Comair. Now, first of all, quite a lot of volume that was traded before it went into business rescue. Again, not casting any aspersions, but if you look at that bottom chart there on the volumes, those are big volumes for that stock. And secondly, this was a company that had been going or had been making profits for more than 70 years, and COVID-19 has presumably wiped it out, or has it?
I don't think so. I think it'll come back. But I think we need a solution box. The longer we drag this out, the more difficult it will be for them to come back. But I think they've got the structure there. They've got the systems, they've got the aircraft. It's just a matter of getting through the next few months. I would hate to see the end of the end of Comair. I followed them for many, many years. Knew the Novick family. Get on. I mean, his dad was there, and one of the pillars of this business, and that I'd be very, very sad if we see the end of this. SAA was in a different position. It was weak before we started. I know that they're trying to get it back up on its feet again, but I hope that we see both of them coming back. I know that it's a very political and difficult point to discuss, but I would hate to see the end of SAA. I would hate to see the end of us having a choice, to go across. I think otherwise air travel is just going to go through the roof. It's going to be very difficult for us to travel overseas and hugely expensive. Yeah.
David Shapiro, thank you for answering all of those questions. Thank you, as always, for being with us this past hour and a bit. We got some interesting insights from one of the industries that is really struggling at the moment. But I think, as David articulated so well, these are the companies that are hitting the wall first, it seems, are those that didn't have great business models for the new world anyway. And Phumelela had been, it was a lovely dividend play for many years, but that leaves your reserves pretty empty when the storm clouds come across. So now the way to look forward, presumably, is to see those companies that are well positioned that will come through or ride through the storm. But let's hope that sanity prevails, and the more information that we keep getting on what COVID-19 really means to the economy, the more this government will trust business and trust us as sensible members of the society to actually not go out there and sneeze on everybody, but to wear our masks and to wash our hands, and maybe not to shake hands again for a few years, if that's what it takes. But thanks again, David, and we'll be back again next week. Stu, before we close off, do you want